Strong domestic demand allowed Sub-Saharan African economies to continue their robust growth trajectory in 2012. This despite subdued global demand conditions. On aggregate, the region grew at 4.4% in 2012. This includes South Sudan, whose GDP recorded a double-digit contraction. Joining us now to unpack their latest global economic prospects report is senior economist Alan Dennis from the Development Prospects Group at the World Bank. Alan, good evening. How are you?
Very good.
Alan, can you give us an indication about the global growth forecast before we begin to tailor in to the Southern African picture? What does the global picture look like?
Well, global growth in Sub-Saharan Africa has been quite robust. In 2012, the growth rate was about 4.4%, and as you mentioned, this includes over a 20% contraction in the GDP growth for South Sudan. In 2013 right through to 2015, we project that growth will pick up to around 5.4% for the whole region. But if you exclude the largest economy in the region, South Africa, growth in Sub-Saharan Africa will actually be around 6%, making it one of the fastest growing developing regions. About a third of countries in the region are actually growing above 6%. Now, it's important to recognize that this growth is not shared by every single country. There are a number of countries in the region that are growing below par. And those countries have tended to be characterized by political unrest, or in some cases, labor unrest, or have faced certain exogenous severe weather shocks. So it's sort of a mixed picture, but overall, growth has been strong, and over the medium term, we expect growth to continue to be robust, notwithstanding subdued demand globally.
Alan, where growth is being projected at 6% and higher, what are the drivers behind that growth?
Yes, I mean, as we have seen over the past 10 years or so, growth has picked up quite significantly in Sub-Saharan Africa. Now, among the drivers of growth have been increased investments. We've seen these investments go into increase the productive capacity, particularly in the mining sector, and that has been supported by high commodity prices. But it's equally important to recognize that the growth has also been very strong in the services sector. And in many economies, growth in the services sector, particularly telecommunications, banking, retail, transportation, are among the fastest growing sectors in Sub-Saharan Africa. And this is true both for countries that are mineral rich as well as countries that are not mineral rich.
Now, emerging markets that are commodity exporting in the main have been said to be that they should expect modest growth over the next 2 to 3 years. What are your insights in terms of the size of the trade volumes that they should be expecting, the volume of that trade and the value of that trade?
Yeah, that's a good question. The bulk of trade for most Sub-Saharan African countries has been primary commodities, and that is expected to continue over the medium term, right through to 2015. Now, it's important to recognize that though in our particular forecast, we see commodity prices declining a little bit, not within a range of about 1 to about 5% over the medium term. But there's a real possibility that commodity prices could decline much more significantly. And if that was the case, then this would impact upon the exports of many Sub-Saharan African countries, in particular those that export oil as well as metal exporters. But our projections are that because of an increase or strengthening activity in high-income countries, that we expect through to 2015, that pickup in global demand will reflect itself in an increase in exports in sub-Saharan Africa. Not only the pickup in global demand, but also the investments that have taken place in many sub-Saharan African countries over the recent years in the mineral sector is also going to show itself in increased volumes of mineral exports.
Sticking within the conversation around trade, we know that South-South trade has to a large extent played a role in bolstering global trade generally. Should we be expecting a continuation along the same trajectory?
Yes. If we take the case for Sub-Saharan Africa, for instance, about 15 years ago, trade with China was accounted for less than about 4% of its overall trade. But today, trade with China accounts for somewhere in the region of 19 to 20% of its trade. This reflects significant increase or dynamism in Sub-Saharan Africa's trade with China, but not only China, but also other developing countries. So this is expected to increase. But it's important to also realize that because of the slowdown in China, perhaps the dynamism that we've seen could be tapered a little bit. Nonetheless, we expect it to continue over the medium term. But let me also mention that besides increased trade with other developing countries, for certain parts of Sub-Saharan Africa, we are seeing that their neighbors are actually those that are the biggest trading partners. For example, Kenya trades more with its East African neighbors like Uganda and Tanzania and Rwanda than its traditional trading partners in Europe. And even West Africa, Senegal, until recently, was trading a lot more with Mali than, again, some of its traditional trading partners in Europe. Now, this trend is not widespread across the region, but it is a sign that as trade barriers are reduced, intra-regional trade within the continent can be an important factor in stabilizing shocks that occur outside the region.